All right, every Tuesday about this time we talk to one of the Fagans at Fagan Associates about financial things. And today we've got Dennis on the line talking a little bit about the economy, which is kicking back in. Dennis, that's great to see. Is there another side to the coin we got to watch out for?
Yeah, a couple things. Okay, one is the global nature of this pandemic means that as we emerge from the pandemic because of our wealth and our research ability with Johnson & Johnson and Pfizer and Moderna having the vaccines and the number of COVID cases go down. A lot of the world, the developing world, is still struggling. We hear news every day in India, 300,000 or 400,000 new cases a day, death rates that are probably underreported, and then struggles for the economy. So I think one of the things we want to keep an eye out for is what's the global recovery going to look like as we move through the rest of 2021 into early 2022? And then a couple other issues affecting the market are the tax proposal by President Biden. What does that mean for the economy? It's certainly not going to be a tailwind, higher taxes, but how much of a headwind is it going to be? And then what type of momentum does the economy have to kind of overcome that headwind, to blow through that, to kind of get escape velocity despite it? So those are a couple of the issues. And I think the third thing is this restrictions in the production pipeline, and then tariffs on lumber that have been in place for a while have caused some inflation. America is now just beginning to open up their pocketbooks after a year of kind of staying home, and so the demand for goods has surged, and the supply just isn't there yet to keep up with it. So though, and Jerome Powell, the Fed chair, says it's transitory, temporary. We'll see. We'll see if it is temporary or it's has a little bit longer lasting.
We're talking to Dennis at Fagan Associates. I know we talked with Aaron last week about housing prices going up because the lumber is costing more. We see the gas prices going up. How bad do you think it's going to get?
I think it's going to get so. The Fed came out last year and they said, "Look, we want average inflation of 2%." Remember, inflation is good. It's like rain. That it creates. Inflation creates demand. If you think your house is going to be higher in price next year, you might buy it this year. Too much inflation is no good because then people's wages can't keep up with it. So to suffice it to say that some inflation is good, and the Fed says an average rate of 2% is okay. And I think it's going to be above that for sure. It's already above that in many sectors and many, reports economic reports that the government puts out and reads from private companies. So we're already above that. I think we're going to see that probably for the next 2 or 3 quarters, and then we'll see how it goes. Is it going to be transitory? And once that pipeline, the supply becomes adequate for demand, are we going to once stimulus kind of goes by the boards, is it going to subside inflation, or are we going to get a big stimulus package, infrastructure package, that's going to keep it around for a while? And I guess the final note or comment I would make on that is we haven't seen labor inflation, but we've got to get people back to work. They don't seem really motivated, some on the edges, to get back to work, so it might come with either a bonus, would be a temporary spike in inflation, or it might come with higher hourly wages, which is more of a secular, longer-term impact on inflation, because you're not going to hire someone for $17 an hour and then say, okay, after a year you're going to go to 15. So that's my concern, is labor inflation is longer lasting but I do believe that the supply constraints is led to temporary inflation.
Okay. Well, it sounds like there's still a lot of things to work out here as we get everybody back to work. And, like you said, it is a global pandemic. So there are lots of areas that, we don't see locally that will have impact for a while.
For sure.
Dennis Fagan from Fagan Associates. Dennis, if people have questions about their specific investments and retirement, how do they get in touch with you guys?
So give us a call, 518-279-1044. Check us out on the web at faganasset.com or like us on Facebook, and we'll be sure to respond to your concerns.
All right. Well, I really appreciate your insight on this stuff and, making it for people like me to understand.
No problem, Randy. Thanks a lot.
All right. We'll talk to you soon.
Take care. Have a good week.
Right,
Bye-bye.